Welcome to another episode of Heartland Market Talk on the Open Range as we are entering our last week for the season and looking forward to seeing you this fall when we return. Well, in the headlines today, wheat market boasting to 10-month highs as the drought in southern Russia along with eastern Ukraine continues to manifest. Remember, just over 2 weeks ago, heavy frost freeze events occurred in these areas, and then rapidly the temperatures warmed up into the 80s and it remained dry as it had been dry for 7 to 8 weeks. And now we're looking at a stretch of heat in the 80s to almost near 90s with, again, no moisture well into June. So this is creating concerns as private analysts now are lowering their crop estimates for the Russian wheat crop down to 80 million metric tons or even lower. What this means is it opens up a window of export opportunity for the U.S. this fall, as we had seen Russia pretty much dominate wheat export sales out of the Black Sea region, pretty much shutting out the U.S. from any reasonable wheat exports to Eastern Asia, Southeast Asia, and along to other African countries. So this is why we're seeing the wheat prices surge as much as we have. Now, the corn market had seen strength alongside of wheat, but recently has softened again. Today's response to the wet weather seems to be muted as we've already priced in lost potential acreage to prevent a plant. But Argentina now has looked to starting its export program to China. This is a first, and of course, this will be competition with U.S. corn, as we've typically sold up to 10 million metric tons of corn to China in the past. Now, the oil prices turning back higher again today, but not outside of the trading range we've seen over the last month. Recall crude oil dropping into the upper $76 range per barrel and then consistently bouncing back to near $79 and then stagnating. Well, we did see the prices travel above $79 a barrel today, but not through 80 yet, as we have a meeting this week from OPEC where they're looking to extend their cuts that they had put in place last year that were supposed to end at the end of 2023, but they extended them through June 30th of 2024. Well, now they're looking at extending them even farther, supporting oil prices. Now it's time to go into Heartland Insights. So now we're going to take a look at the weather forecast through Friday, June 7th for the Black Sea region. Recall, this is the Black Sea. This area of eastern Ukraine is what is suffering in the drought. Absolutely no moisture now we're seeing through June 7th, whereas southern portions of the Russian crop growing range does catch some rain, but otherwise other areas that are in this light green look to receive maybe a half an inch to 3/4 of an inch in about the 7 to 10 day window, which of course we've seen this happen before and the rain's not materialized. So the grain trade is looking this as a concern here in the Black Sea region for wheat production that continues to have a shortfall in rain. Now, speaking of shortfalls in rain, Mexico is caught in a drought, and this is the April 1st through May 27th recording of below normal precipitation potentials we've seen in the Mexican crop corn growing areas. Recall these areas that I am now circling, and we're going to take a look at where the corn is grown. That is where I had drawn corn production in these areas that are experiencing large periods of drought. And this is why we're going to see Mexico, who was a buyer today of over 210,000 metric tons of corn, looking to be a continual buyer of our corn, pushing our export projections higher this year than what the USDA has us planned for. Now, moving on to the action of the trade, this is the Kansas City wheat. Again, late last week and early today, we've seen wheat futures push again to new annual highs and getting to the best price we had seen since last September. Same thing goes to Minneapolis wheat. We'd seen this market again push higher Friday and on early Sunday night's trade to the best pricing levels for the calendar year and going back to about late September for the Minneapolis wheat chart. So this is offering selling opportunities for new crop wheat trade for domestic farmers. Corn, reversing lower from last night's strength. The market had moved up following the wheat trade, but could not best the highs made back in early May and turned lower in an outside day down action. That means that today's high and low were greater than the prior day, and we closed just almost below the previous day's lows. Not quite achieving that on the close, but one market that did do it was soybeans. Traded above the prior day's highs and then below and closing below prior day's lows. That is an outside day down close. A very negative aspect we have to watch for. Technical damage has occurred. We need to see these soybeans hold at what we call moving average support. And if the 12-20 range can hold up for beans, we might see that market again firm up again on possible Chinese demand that has been absent as of late. Now the crude oil market. The crude oil trade we had shown it breaking down last week, talked about this $76, $80 range to $77, while it always rebounds to the $79 price range, has not exceeded $80, but recovered today do the breakdown on this trend line. Now, if we get further strength above $80, it means OPEC succeeded in doing something, either not only extending their cuts farther out into the year or possibly even adding to those cuts, which then, of course, would create a recovery of upside potential on this range. In the meantime, though, we did see gasoline prices soften over the past month, and we should see prices be stable for the time being. Now, the gold market, double topping with the April highs that occurred last week. They pushed through it briefly in the morning of trade. That was over a week ago, and stumbling. And now we're seeing the gold trade with what we call a double top for now. Seasonally, gold does peak in April and May, which here is your April and here is your May, which is seasonal tendency then to soften or go sideways into the month of August. We might be possibly setting up for this same kind of scenario, but that does not rule out potentials for rally as the market now breaks hard sideways before determining its next direction of trade. August cattle, we have to bring to note the cattle trade has been struggling since making its high last September. We have short cattle supplies, and of course the market had tumbled into last December, rallied into March before the avian flu scare pushed us back lower again. Well, since then, we've had an ABC market we call three-wave, which is typically negative. An ABC recovery in cattle occur, and we're likely heading back to the downtrend line resistance that has occurred on these charts, which could be a bearish influence for cattle trade in the 82.5 to 83 range for resistance. Look for putting in livestock risk protection at this time, and we offer that at heartlandinvest.com. Now it's time to go into the question of the day. We remind viewers, send your questions to info@heartlandinvest.com. Now we had a request on what is cross-margining. Well, sometimes this is used by traders to slow down the requirement of money that's needed in their accounts, margining that gets in the way. And so sometimes you'll see traders be long soybeans and short soybean oil. Soybean oil typically doesn't move much marginally as compared to soybeans, so it's a way of softening the blow to the requirements for margins and their risk to the downside if the trade goes against them. Same thing goes with trading crude oil. They'll cross margin with natural gas. It's a natural way of trying to take care of the risk by, instead of trading options, you're staying in the futures market, and by staying in the futures market, you don't deal with that premium burn where the market has to perform immediately or you lose out on your potential. That is the answer to cross-margining. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well.